What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC up 15% on the day. In this video, I want to talk about some of the similarities I see happening right now that coincide with the run-up back in June. I'm going to cover everything for you. Before we get into it, I want to talk briefly about the entire market. Yesterday's video, I stated that 446 level of resistance on the SPY was very strong, and investors continue to push this even higher after the massive 5-day run up. And it seems like they're having a little bit more positive sentiment, okay, even with the Fed continuing to maintain that they are going to raise rates as fast as they need to fight inflation without trying to hurt the economy. There was a time where investors did not believe the Fed, but obviously over the past 5 days, it does look like that is going to continue. And remember what I said, if you didn't see yesterday's video, there's a lot of money on the sidelines. All right, we watched Apple today have a nice break over that 166 resistance. And Tesla, once it got through 950, was a smooth sailing all the way to 1,000. Okay, before we talk about AMC, for everybody inside the group that is watching this video, we've talked about how there are certain days that are sideways days and chop days, and there are other days or even stretches of days where the market runs in cycles for weeks where there are trend and directionals, okay? And there was a time, even just like yesterday, where we were looking for that resistance level and we were playing puts up at that resistance level when it was rejected. Reason being is because that was happening a lot, those false breakouts. Today was completely different. Once we broke through that 446 level, it was a smooth sailing. Obviously, volume slows down towards, about lunch hour and midday, and it continued to push into the close. It was a phenomenal day for the entire market. Now, don't get me wrong. We've had a massive run up over the past 5 or 6 days. Okay, if you remember from last Tuesday. So seeing a little bit of a pullback obviously will be natural, but let's get into AMC. Okay, today up 15%, a little bit of a difference happening. And I know all of you can see this right now. A lot of times when we've seen this push, it's been a hard sell-off. We saw a lot of consolidation, okay, which leads me to believe by looking at the charts, and what this tells me for tomorrow is we are going to see another leg up, at least a leg up at the open or gapping into pre-market. We haven't seen that massive sell-off, and it's still holding in after hours. The volume today was about 185% of the daily average at 76 million shares traded. When you look on bar chart, the most active options, 77% of the contracts traded were call options. We really haven't seen over 70% in quite some time, and it's been sitting around that 63 to 66% for a while. 593,000 contracts. Oh, I'm sorry, 649,000 contracts traded. Apple and Tesla are always up high. Apple's normally always one, but 649 is massive. A lot of interest. All right, so we're talking about options here. So if you remember the run up back in June, if you were a part of this, all right, if you were been in this play for a while, okay, you know that once we broke over that $16 and $20 level, the option chain was completely different. Okay, some of the strikes for certain time frames was only at 24, 30. We didn't have the 40s, the 60s, the 145s on the monthlies like we do. That didn't happen up until June. Okay, so there was a time intraday when 100% of call options out there were in the money. Market makers could not create new contracts at higher strike prices quick enough in order to offset some of that. Okay, so what happened for a while going in some of this time frame is a lot of people were buying those 145 call options, the 90 call contracts, and so forth. And therefore, when the price did move and we did see a lot of in the money options at, let's say, the 40, the 50, all right, when we were going through this time frame, market makers didn't really have to hedge their positions because there was so much action that was out of the money, okay, that their risk was still okay. And that's called staying delta neutral. That's why you hear the term delta hedging. Here's where things change up a little bit, okay? First of all, let's take a look at, this is the April 1st options chain, and the March 25th and the April 8th are the same. The April 14th is a monthly chain, which is a little bit different, all right? These strikes are written a little bit further out. So therefore, the max on this is $60 for a strike price. There was a time, guys, this is 145, and I'm sure everybody who's watching this video remembers those times like it was yesterday. But if you look at the April 1st, right, which is only a week and a half away. The highest is $40, okay? And a lot of the IV is very high. If you can see, some of these options went up. I mean, look at this, guys. The percent change, it's insane. 420% in some of these, okay? So what happens is, obviously, it's still over a 100% move for AMC to go, for the stock price to go, in order to get all of these obviously in the money. But we've seen before that the higher the price moves, all right, you're going to see the dollar range, the range be greater, okay? So when it's sitting at, you know, $25, moving $3 to $4 is much easier of a move than it is when it's sitting at $13, okay? And that's all based on percentages. So there comes a time where the market makers could be tripping over their feet. Now, like I said, guys, we are still very early on, okay, in this. And as you know, it is Tuesday, okay? So there's no way I'm going to overhype this, because we know that Thursday and Friday, volume slows down a little bit. That's when the bears take over. Some of the bulls take the weekend, an early weekend, all right, and the market makers begin to pull that price going backwards. So let's not get ahead of ourselves, but it's good to know this going forward. In no way am I recommending buying options, obviously, for AMC. I know a lot of people have literally waited for the run up to just be parabolic, and then they start buying options, and you're really not buying at a proper time. Even if you did make money off them, or they go in the money, okay, or you sell them and trade them for a higher value, that's great, but you don't really want to be buying something like this on a parabolic move. Okay, one, because market makers will screw you over, and two, the IV is so high that a lot of people just end up losing money in these, okay? But seeing the chain a lot more, okay, constricted, okay, and tighter is a very benefiting factor for AMC. And that's what I'm talking about with the similarity with back in June, okay, when we saw this massive run up. And as you see, once it was a few days, it was push, about 100% move, and then it was just bam, all right, and immediately ignited. And don't forget all of the institutions that are still behind this. And I know you might be thinking to yourself, okay, well, those institutions are going to hold the price back, or they're going to lend the shares out. Listen, guys, if some of these, okay, brokers want to be able to short the stock, they're going to be able to do that. But like I said, it's that gamma, okay, that is going to give the initial spark, okay, to get this squeeze to be going to the upside. So like I said, this is a very early on, and I want to just, share this with everybody. Also, when you look at the stock options volume leaders, AMC is on here with that $20 call option, 51,000, okay, contracts traded as of today. Like I said, the open interest sits a little bit lighter, 8,000, okay, open interest are ones that are actually carried and held. This will update for tomorrow, all right, and volume is what is actually traded back and forth as of today. So guys, that is going to be it for this video. I'll see you in the next one.